everyone's talking about risk back, and we're up 202 points right now. But then you look at last week, and we had those terrible down days. It's a tough market to trade in. So which exchange-traded funds should you be betting on? One thing we know is volatility is here, at least for now, to stay. We've got a new face to CNBC this morning, Dave Caruso, founder and CEO of Coastal Capital. Also with us, Tom Lydon, editor of ETF Trends. Good to have you with us, Dave. Since you're new, the courtesy would be to go to you first. So let me ask you, how do you use ETFs to trade in a market that is so volatile?
Well, you know, I got to stop to step back a little bit and say, well, where are we in the scheme of things? And right now, our biggest places and positions to be are commodities and cash. So I think we're a little cautious about what's going on in the market. Great start today, but we like to look at the things based on the fundamentals. We like to look at things based on the valuations, and we like to look at things in technical, and the technical is the short-term stuff. So there's a lot of things that we're looking at right now, and we've got multiple models that we try and pick and choose whichever sleeve people want. All
right, so let's go on the technical side. If this is, as you just said, that's short-term, that's for now. What are you buying?
You look at the broad-based commodity. There's a USCI. It's a commodity index. Basically, it's a nice broad base. It's got all the major food groups. It's got the metals and the precious metals and the industrial metals. It has energy. It has grains. So I think that's a good place to be. Also, in looking at that, my two favorites, other than this U.S. commodity index, is basically the moo and the cow. I mean, you just got to say both of those together. Since I was 3 years old, I said it. And it's dealing with commodities like the agricultural index. So in looking at it, the cow is two livestock indexes. And looking at the other one here, looking at the moo, that's more agribusiness. It's stocks like you might see on Monsanto, or you may see things like Tyson. And there are a number of commodity groups in there, even potash. So we think those are plays that you should be looking at in the commodity sector if they fit within your risk parameters.
All right, Tom, what's your short-term for now ETF trade?
Well, if you want to look at opportunities in the Pacific area but stay out of Japan, the iShares Pacific ex-Japan is a great opportunity. Most of this ETF, EPP, is in Australia, which is a great producer of energy and commodities, and we got this commodity trend that's moving. It's a great opportunity. Also, the SPDR emerging Pacific area, China, India, Singapore, all are moving and have great GDP growth, great opportunities, but also staying away from Japan right now if you're a little antsy about it.
All right, Dave, Tom, thanks very much to both of you.
Thank you.
Thanks, Aaron.